Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy stocks in the gambling and casino industry. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. As I said, today we're taking a look at 3 stocks in the gambling and casino industry that all come in with a strong buy consensus from Wall Street Analysts. So we're going to take a look at these companies, what it is that they do, and of course what these Wall Street Analysts are predicting for their stock's future. Just before we get into that, this is a heads up that right now TipRanks is having a wonderful sale where you can get 40% off premium subscriptions plus 50% off a newsletter of your choice. So it is a great time to unlock some fantastic research tools. You can follow the link in the description down below. Now let's get right into these casino stocks. Trading under the ticker CHDN and with a market cap of over $10 billion, their stock is currently priced at about $136 per share. The stock has seen growth of 42% already this past year and took a big jump up here at the end of April. Churchill Downs is the company behind the famous Kentucky Derby, who just finished their 150th race. With their inaugural race back in 1875, the Kentucky Derby is the longest continually held annual sporting event in the United States. Today, the Derby Week is preceded by a whole month of events celebrating the Derby and bringing in over $400 million to the local economy every year. Churchill Downs is the #1 most profitable horse race wagering platform, and they have 28 industry-leading regional casinos and HRM and racing properties. Now, HRM stands for Historical Racing Machine, which is basically another version of a slot machine. And just last week, Churchill Downs announced that they secured a site in eastern Daviess County in Kentucky to build their HRM entertainment venue as an annex of Ellis Park Racing and Gaming. This new facility will support purse funding for Ellis Park race meets. This will add to their growing portfolio of properties, including their live and historical racing, largely across Kentucky and Virginia, and plus all of their gaming industries across various other states. As I mentioned at the start, their stock did jump up near the end of April, which was when their Q1 earnings report came out. The company released a solid earnings beat, plus record net revenues. For their Q1 earnings report, they reported earnings per share of 98 cents, coming in 11 cents ahead of analyst expectations. Plus, their record net revenue of $559.5 million was well above the $364 million from the year prior. The company also announced a 2-for-1 stock split around this time. Shareholders received 1 additional share for every outstanding share held as May 5th, and they began trading on their split basis after May 22nd. There have been 5 Wall Street analysts who have reiterated their price targets all within this last month, and they unanimously come in with all buys. With an average price target of $162 per share, that would be an upside potential of over 19%. And you can see here we have a very tight range of price targets as well. Looking at our detailed list here, we can see that all of them range from 14 to 21% upside potential. Next on our list is MGM Resorts. With a market cap of over $15 billion, their stock trades under the ticker MGM, currently priced just shy of $43 per share. Now, their stock has seen growth of over 46% over the past year, but has taken a little bit of a dip here over the last few months. MGM is a pretty well-known name in casino resorts. Their resort portfolio encompasses 31 unique hotel and gaming destinations globally, including some of the most recognizable resort brand names in the industry. This, of course, includes their MGM Grand, as well as other big names like Bellagio, Aria, Cosmopolitan, and Mandalay Bay, all just within Las Vegas. Of course, they have plenty of other MGM resorts across the United States, but also around the world as well. Beyond physical casinos, sports betting and iGaming is becoming more and more popular, and in this aspect, MGM has their venture, BetMGM, and they continue to gain market share here. In their most recent quarter, they shared that BetMGM achieved a market share of 28% in the iGaming and 17% in the U.S. sports betting space. And just at the start of this month, they announced that they would be launching their mobile sports betting in Puerto Rico. This will make them the first operator to deliver mobile sports betting in the country, and Puerto Rico is the second market outside of the U.S. mainland for their betting app. Back in April, they also shared some updates on their international plans as they received certification for plans in Osaka, Japan. They received certification of their area development plan in Osaka, which was one of the first steps in their new $10 billion development project. MGM shared their most recent earnings report at the start of May, where they had a record quarter and beat on earnings estimates for the first time in about a year. For their Q1, MGM reported earnings per share of 44 cents, coming in 38 cents ahead of analyst expectations. They saw consolidated net revenue of $3.9 billion, which was an increase of 36% compared to the prior year quarter. Looking at MGM China, they saw net revenues up 130% year over year amid strong reopening trends, and their Las Vegas Strip resorts was up 41% year over year, which was the 7th consecutive quarterly record. The MGM stock is currently rated a strong buy based on 12 current analyst ratings with 9 buys and 3 holds. The average price target comes in at $58 per share, which would be an upside potential of 35%. The most recent rating came in just 2 days ago with a price target of $58, and a lot of these are north of 30% upside, which is some pretty bullish outlook. And third on our list, we have Las Vegas Sands. Under the ticker LVS, their stock has the largest market cap out of the three at $44 billion, currently priced at $57 per share. Now, they really took off near the end of 2022 and have seen 71% growth over the last year and are up 5% in the last few months, taking a dip here at the end of May. Las Vegas Sands is the world's leading integrated resort operator and developer, and an integrated resort is basically a hotel and casino combined. They pioneered the convention-based integrated resort model with the opening of the Venetian Resort Las Vegas back in 1999, and today they have properties in both Singapore and Macau as well. They're the largest integrated resort operator in the world's largest gaming market. Their Venetian Resort in Macau is actually one of the most profitable casinos in the world. With over 1.65 million square feet of gaming and retail space, this property is the anchor property of the Cotai Strip in Macau. They shared their latest quarterly report on April 19th, where they had a solid earnings beat, but also saw big year-over-year net revenue growth. For their Q1, they reported earnings per share of 28 cents, coming in 8 cents ahead of analyst expectations and breaking a streak of misses here. Their net revenue came in at $2.12 billion. That was compared to $943 million in the prior year. They also noted a robust recovery in travel and tourism spending underway in both Macau and Singapore. There are currently 13 analyst ratings on their stock, coming in as a strong buy with 11 buys and 2 holds. The average price target comes in just over $70 per share, which would be an upside potential of 23% for the next year. The most recent rating came in just 3 days ago from 5-star analysts at JP Morgan, who gave the stock a buy with an upside of nearly 25%. All of our price targets here are above the double digits, even with our hold ratings. So there we have an overview of 3 stocks in the gambling and casino industry, all coming in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below and which one you'd most likely place a bet on. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at and providing some information and entertainment. Make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, hit that thumbs up button and make sure you subscribe to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.